Well, brothers, good evening in the Bay Area, and good morning in Korea, where Ian is. And we were just talking about how our podcast appears to be going viral, right? Specifically with a narrow niche of Korean venture oriented audience members, right? Isn't that what you just said, Ian?
Hey, it was Kevin. Kevin, you met a lot of people
Oh,
in
Kevin, yeah.
KDV that people are
Yeah, I
talking
mean,
about.
there was a huge Korean conference yesterday called Next Round, and literally, like, everyone that I talked to was like, "Oh yeah, I love the podcast you guys are doing." And so I was like, "Oh wow, we're really reaching quite a bit of that constituent." But yeah, I would love to get more folks, even from outside of that too, to listen to it.
Well, I think the next step for you and me, Kevin, is to start working on our Korean skincare game so we can get that nice Ian Park glass skin, right?
That's
So we can
right.
level up with him.
He's like glowing. Look at him.
No,
Korea looks healthy. It's healthy on
I'm
you, man. You
actually
got the
excited.
haircut.
Yeah, I mean, I've been going to these clinics like once I'm here, so I think hope it works out well. And I'm actually really excited for us to do an offline like show
Yeah,
together in a studio.
yeah, we
We're
gotta do
definitely going
that.
to do that. We just found a studio space in the Bay Area, and maybe we'll someday take this on the road. But before we can dream, we gotta start to build our audience by actually getting into what happened in the last week. Once again, big thank you to the Ian Park Claude AI system for nominating these stories. And the first one on the list is how UAE, United Arab Emirates, is leaving OPEC, right? So the cartel is breaking apart. We're seeing some fragmentation here. What the why? Like, what do you guys think is the motivation for a country at this time to be leaving OPEC?
I think it's more around, UAE try to be on their own. I mean, they've been under control, but they've been mostly controlled by Saudi a little bit, but they feel like they can be independent now. And the market is welcoming because they think that's going to stabilize the oil price a little bit. But I kind of don't agree with that. I think this will actually make the tension in the Mid East a lot more worse than now to some extent because so far we've been dealing with Saudi. Saudi was taking care of Middle East for us, so we didn't have to go through like every single countries there. But then they're losing grip of it. We have to deal with each one of them one by one. It's going to be harder, and China is trying to scoop in there. So I don't know. It's people think it's going to be better for the oil prices, but I think it's going to be the other. Why? I mean, I think it's otherwise.
It also starts to erode, I think, the petrodollar dominance, right? I mean, like USD is underlying all the trade in OPEC as well, which has been a big beneficiary to our country, the United States, that is. I imagine China's going to say, like, hey, we should create like an RMB kind of system here and maybe some sort of trade that's beneficial to UAE. I don't know, Kevin. Do you follow these kinds of macros? This feels like big movement, but frankly, in my pre-seed world, I don't really see it too much. But I know it affects me.
Yeah, I mean, to be honest, oil is one thing I don't follow super closely. I guess outside of the fact now that you go to the gas station and gas in
Seven
California is
bucks.
like $7, which is kind of crazy.
Do you
I
go to
feel
gas?
like go ahead. Oh, you
Just,
have a Tesla. You guys don't care.
Now my minivan costs like $80 to fill up now, which sucks.
You have a minivan too. Oh, that's right. Okay, okay. So you have a Tesla 3 Model 3 and a minivan?
Got the Model Y in the minivan. You know, when you guys become dads, that's the setup. That's the garage. Okay.
Why do you need the minivan?
The minivan is great for road trips and long hauling. And what starts to happen during school is that you start chaperoning and bringing lots of kids in one
Mm,
place. So it's really good for that. It's a great utility vehicle for hauling a bunch of junk. I have a bunch of stuff in there right now. And then
yeah.
Tesla is the perfect commuter car.
Yeah, yeah. Because I was thinking that Model Y probably should do all that your minivan does, but I guess you get more seating, a little bit more space.
Exactly. Yeah.
Interesting. Okay. Well, anyways, I mean, my I have to put premium gas in my car too, which is a
Good Lord.
real pain because even more expensive.
Everyone
Uh,
in our audience is crying for you right now, by the way, about your
I know.
premium gas problems.
First world problems buying premium gas. Yeah, I honestly don't follow oil super closely, but I think one thing this probably shows is just it seems like the UAE and Saudi relationship has started to deteriorate more and more. I mean, I've been to both countries, and I do feel like it is a very distinct, actually different like culture and even like societal norms, and obviously both of them have their own like financial institutions and sovereign wealth funds that used to be more like big brother big sister, kind of relationship, but I feel like more recently has started to also kind of disentangle themselves from each other and kind of go their own ways, whether it's like Mubadala in G42 versus like PIF and all the subsidiaries that work with PIF as well. So it's kind of an interesting thing to see how that's started to I guess unravel a little bit, that like very close relationship that they had, which kind of makes sense. There's a lot of conflict and seems like a lot of chaos right now.
Ian, do you have any theories in terms of how this kind of movement away from OPEC, or even let's say broadly oil prices, are going to start to affect our venture ecosystem here in the United States or startup ecosystem?
So I think there are two things there. One is just the oil price, inflation, and our market IPO windows. That's going to be a big deal for us. The other side of it is I think this is more important to us. Do you know the Saudi and all these Middle East guys shut down Leaf Golf? They started a Leaf Goal to go against the PGA, the
That's
US
right.
golf system. And everybody was moving towards that. And it was a big deal for a while, but they're shutting it down because they're running out of money. They're not interested in that anymore. So this clearly shows their commitment issues to some extent. So that translates us into like if you have a Middle Eastern LPs, we don't know what's going to happen. I mean, this is something that I've been telling my friends that, hey, I wouldn't go to Middle East to raise money or go to China to raise money because that's going to be, there's always a risk of, U.S. Saudi relationship, U.S. UAE relationship, or U.S. China relationship, as well as their own inside conflict. So I don't know, the commitments we got from that pool of money to the U.S. venture ecosystem. I don't know how that's going to turn out for the next 5 to 10 years because that's where we got money from. So capital calls, this might be a little extreme, but I'm expecting some LP capital call defaults from those countries sometime soon.
Interesting. Yeah, I don't know. We'll see. I think a lot of them have also started shifting a lot more towards direct investing as opposed to being like huge LPs. So um, yeah, it's definitely very rapidly changing landscape for folks that, a lot of at least emerging manager friends that I've talked to, have gone to try and fundraise in the Middle East, and it's very different from how it was, say 5 to 10 years ago.
You
Yeah,
know,
and Middle East has
I
been. Go ahead.
go ahead, Ian. No, I
So
want to
it's
hear
been
yourself.
it's been anyway, and I never. I mean, they have their own money, they have different interests, so it was really hard. I mean, they're also far away, and it's not 100% U.S. aligned. That I always saw a risk. I just feel like the risk is a little higher than before. But they're great people.
So I just looked this up where Phil Mickelson's contract was reportedly $200 million for Live Golf over 4 years. And I can start to see why the Saudis would view that as a poor investment. So my pitch to the Saudi government is give each of us $66 million for our respective funds, and we will turn that into a 10x DPI, outcome easily, right? So none of this Phil Mickelson garbage. We got the three commas here to park your $200 million. So hopefully some Saudi folks can forward this YouTube episode to the right people at PIF. But let's talk also a little bit more about macros for this next topic, right? So, Ian, we were just trying to get bearings in terms of what we wanted to say about this, but the U.S. Fed, Federal Reserve, is under attack, right? So it's long understood that this was an independent body, that politics should not interfere with the workings of the Fed. And there have been a slew of really disturbing things lately around attacks on Powell directly, his character, lawsuits that are thrown against him, and of course the successor that the president wants to put into his place, that ostensibly is kind of like a lackey, from what I can tell, to the president's whims. So that sounds pretty bad. But I was kind of interested in your take, Ian, to start because, again, this is sort of a topic that a lot of, I think, VC podcasters aren't talking about right now. It's like Fed independence. But why do you think it's important for our primarily Korean audience right now to understand this?
But I think it's less about the politics, but it's more around the inflation and how macro is going to affect our exit windows and also valuations in general. So I think we're all trying to time out when, I mean, just me, but time out when the AI market crashes. I think this is not sustainable. So I'm just trying to figure out how far we can go with this Anthropic's $900 billion rounds and OpenAI's with the SpaceX $1.75 trillion IPO. So I'm just trying to see, like, once we have the new Fed chair, we might have a more lenient monetary policies, fiscal policies, then we might get some inflation. Then we have more money, so we can actually expect those IPOs go through to some extent. Then we're fine. But if not, I don't know. That's just something I'm trying to figure out. And I personally believe when market crashes, that's the best time to invest in the best startups. The endurance of the startups are going to be different. The ones that got fired from big tech is building something great. So I'm also timing. I'm not just shorting the market. I'm just trying to long the market right after the crash.
Kevin, what's your moves right on this? Like, are you also doing these complicated short longs right now, like Ian?
Not really. Honestly, I've always sucked at public markets investing. Just like I don't know. I'm like a typical like panic consumer like day trader. Like I've always bought it, done the opposite of what you're supposed to do. So I usually just like after I learned my lesson, years ago, I was just like just hold it, don't look at it, and just let it sit there. Which is probably good advice for everyone, most people out there. But I am a little bit, kind of surprised by all the rhetoric that's going on about this Fed chair nomination and also the rate, the influence that President Trump wants to make on rates. Because I think, Janet Yellen and Powell are correct, right? The Fed is supposed to be an independent institution that has its own mandate and generally is not political and does not lean in any party, and it's really to help maintain the health of the overall economy. And so I think there is a very systemic infrastructural issue if a president is getting involved with setting Fed policy, which is not something that is a partisan, should not really be a partisan issue. And I think if the Fed does lower rates, it looks like Powell is supposed to be ending his term in the middle of May, so May 15th, and then if the new Fed chair comes in and lowers rates, I feel like we are going to see a very hot market for the second half of this year, and we'll probably see a lot of IPOs. We'll probably see. I don't know if this is a good thing, but we might see something similar to like the SPAC and COVID era where, we reach all-time highs and risk assets go up, right? Whether it's, at that time it was a lot of crypto, Bitcoin and altcoins or shit coins, whatever you want to call them. This time around, I don't know what, I mean, obviously privates also went up during that time around too, and had a, SPAC explosion. I wonder if that's something that we'll end up seeing a bit more of if rates do go down. And at that point, I would probably be in Ian's court and agree that maybe it's time to buy some puts or start shorting the market because as we all saw, during COVID, it was a very rapid ascent and a very rapid descent during that period of time.
I mean, the timing is suspicious for all this movement. So we have an election coming up this fall for Congress. It's going to be an important one. Hope everyone goes out there and votes. And I kind of see a bifurcation in strategy here. So, on the one hand, I think none of this is going to be good for regular folk. And I'm not talking about the three of us. We are not regular folk. We're on a very different kind of side of the table right now. I actually just did, I do my finances every month. I kind of look at like, what did I spend money on? And I compared it actually year over year. And I noticed that my grocery budget went up by 40%. Right. And that's pretty substantial. But relative to, other things that are happening within like assets pumping, like it's actually very easy to eat. And I'm not saying that to brag, but I'm actually trying to make a point of like that is not normal. Like most Americans don't even own a single stock. They're not part of this ecosystem that is driving asset values so much. So 40% hit on groceries and anything else, fuel is going to really feel bad. So that's one end of the K-shape. Other end of it, here's my grand unifying theory, is like if you're going to pump asset prices by lowering interest rates, which seems like what's going to happen, then yeah, in the next couple months, I agree with you, Kevin, this is going to be a massive pump. So for those financiers who are trying to get behind maybe some of the president's candidates or his agenda for this upcoming election, they might be feeling like this is working really, really well for me. I'm seeing like a white hot asset growth. And those are the ones that are kind of underwriting elections at this point. So maybe politicians are only trying to serve a narrow set of very privileged constituents right now, which is where I think I can find edges of logic. But everyone else, like the bottom 98%, I think this is going to be really, really tough for them. I don't know if anyone has a reaction or comment to that, but I get the sense that that's kind of what's happening is a lot of marionette play, like puppets for the election this fall.
Yeah. I mean, I don't know if we've talked about it much on this podcast, but I think, inequality is continues to be a huge issue where there's people who have exposure to all the stuff happening in AI and technology and, people who own stocks, and the top, whatever, 1% versus say the bottom 50%, that gap just continues to get wider and wider. Right. And so, I don't know, we'll see how. I haven't seen any polls, but I'm very curious to see what like the approval rating is, because obviously, I think at least the first time that Trump ran for president is much more of like a populist kind of agenda, and I feel as if the things that he's done don't necessarily represent that, especially in the second term. So I'm genuinely curious, like how people are perceiving, how he's performing, especially the demographic that he, got elected from.
It's going to be an interesting next couple months. It's been certainly an interesting past year. And you know what else is really interesting? Who's having like a really, really bad week this week? Those founders at Manus. Actually, Kevin, I want to stick with you on this one. So, actually, would you like to introduce from your vantage point what has happened this week with the Manus founders?
Sure. So this is an interesting one. I was actually at a happy hour this week with a VC fund that is a good friend of mine, Alvin. He runs a firm called NYX, and they also have a very good relationship with like ByteDance, and so they had some ByteDance folks at this happy hour, and I was asking them what they think about it. So basically, the context is that the Chinese government, or Beijing, ordered the unwinding of Meta's $2 billion acquisition of Manus, and Manus was this very hot Chinese team, AI agent startup that ended up moving to Singapore, and they got really viral in 2025 because of all their task completion AI agent demos. And after the deal was announced, there was a lot of news about how the founders were stuck in China and they couldn't leave the country. And then I think recently, basically, Beijing said like, you can't. This deal is not happening. So return the money. Deal's blocked. And I don't know what's gonna happen, to be honest, because like from what I heard from someone, like the money's already transferred. Like Meta's already paid the money. The VC firms already have the money, and whoever the other sellers are. And so But I think, this is very much like, in my mind, like a Jack Ma kind of situation where the Chinese government is basically saying, let's make an example out of these founders. Let's make an example out of this company. Do not do things that we don't like. Do not let, AI technology that is cutting edge and really sensitive and really powerful go from China to the US because, there is a lot of political tension in that relationship. And so it's almost like, just let's make an example of this, like be careful and don't, cross the line if you are a Chinese company or Chinese founding team, which is, really scary. And I think, it's not surprising to me, but it shows just how this bifurcation geopolitically is going to probably continue to be very, very harsh.
I mean, Ian, this is fucking crazy. There's like over 100 employees from Manus that already have employment contracts and are already working at Meta, right? Like, how can like this overreach even work? Like, who's holding the bag to give money back to China in this thing? And what's your general reaction when we first saw this thing?
I mean, we all expected this. Like, what do you expect from China? Like, I mean, there's some countries that you don't trust in terms of capital markets. I mean, I'm not saying Middle East is the same league, but there's some risk always associated with, China and Russia and all those like non-traditional allies of the U.S. market. So I always think there's a huge capital market risk for those countries. And that's why I think, some portion of Europe, Korea, Japan, Singapore might be the most advanced and secure capital markets that you can invest and get money from. But outside of that, there's always some emerging market risk that you're carrying. And this is one example that, if you deal with China to some extent, you might get fucked. And
I
it
mean,
happened and
but
it's going to happen.
isn't basically nowhere safe though? Like, let's take the case of Singapore. So first, on the record, I love Singapore. I love visiting. I think it's an amazing society. I think the government is
Hmm.
super impressive. But let's get real. It is also essentially a dictatorship, right? I mean, like it, it is like a single party that has designed a society where it works really well if you function within the boundaries. But if you don't function in those boundaries, it definitely won't work for you, and they'll make a swift point of that too. So I mean, right now it's very benevolent, and I think very much works well for the people. But if a crazy person comes over there, then like I don't know how safe it is over there. I mean, U.S. I mean, I have my beliefs about the president, but like I think he's a very volatile character, right? And actually, the nature of like America's society, I think, has shifted dramatically over the last year as well. So like, I mean, there isn't. If I were a founder, like, there's a small part of my brain that I'm probably not thinking about or reaching too much. It's just like, is this the best place to build? America's still the default for all that stuff, and I think I strongly believe that. Um, but I don't know. This is like a period of anarchy, right? Are we just like little like are we playing like a board game right now, and like all the risk characters in different countries are just going at each other, using us as pawns? It kind of feels like that.
Yeah, I agree to some extent to that, but it's always relative. Like some markets are more secure than others for sure. And I just want to make sure that this is less about the society or people. It's just more about rule of law on the capital markets. So, I mean, people go crazy stuff, yes, but we can still put our money into investment and get our money back. I think that's the most important part. China had this problem with Korea as well. Like Korean companies investing a lot in China, they just confiscated everything, and the companies had to leave empty-handed to back to Korea. This happened over and over. Just people keep forgetting what kind of risk that they're getting into, and people just forget about everything. Like we forget about dot-com bubbles, and we still have AI bubble. We forget about crypto winter, we still do this AI stuff. We forget about the recessions and Big Short and everything. We're still going for it. So it's the cycle that we see here, and China is showing that again. It's not the safest market to be in right now, and maybe forever.
I mean, I was just looking this up. Like the Hong Kong Hang Seng
Yeah.
Tech Index is down 14% this year. And so, like, this happened. I mean, it's funny because this has happened so many times now, right? With Jack Ma and Ant Financial and education stocks as well, like TAL and New Oriental, that basically the Chinese government cracked down on saying, like, it's not allowed to have, extracurricular tutoring because it's not fair for everyone to, some people get it, some people don't. And so, like, those stocks got crushed, the Alibaba stock got crushed, and now we have this again, and the Hong Kong stock index is getting crushed. It's just like a really bad look, frankly, for the Chinese, economy and tech ecosystem, which I don't know if the government if Beijing has just decided, like, that's secondary to control or other goals that they have. But it certainly makes it hard to be a capitalist and think that, or be a founder and say, I want to build my company in China or in China anymore, right? So it's a very strange and interesting for me to, in my opinion, to see that, because you would think that having a really strong economy is arguably the most important thing, right?
So I also think on the other side, this is the expression of confidence from Chinese government. They don't need to rely on outside technology anymore. They just need to keep what they have here and develop from here. So, I mean, I think as Americans, I think we really think this is a big threat. It's not like China had to open their doors and get all the best technology come in so that they can copy it, but they're already ahead, maybe to some extent, ahead of the rest of the world in terms of AI technology and all this stuff. So they're like, we don't need money from Meta, or we don't need people from Meta. We have enough people. We just need to keep them in here and develop our own technology. So I think it's also a confidence, and it's a risk to a lot of American companies and investors too.
Yeah, I guess what you're saying is it's not about financial capital, it's actually about human
Right.
capital. And we just
Yeah.
Yeah,
need to
exactly.
keep all of our human capital because we think that we have better human cap, or, like, as good or better human capital than anyone else. So we can
Exactly.
succeed as long as we retain that.
Yeah.
Yeah.
And they know US is gonna, I mean, US has done stupid things too, like Huawei for 5G and all those kind of stuff to keep our momentum in terms of or leadership in technology for a lot of different areas. And we're trying to do that on the AI too by not letting Nvidia exporting the chips to the China and all that kind of stuff. So they China didn't respond to that because they didn't want to fight until now. But I think they're ready to fight. They know how good they are, and it's happening all over the places. I think the production or manufacturing is U.S. manufacturing is lagging behind, and our military spending is a lot, but still, like, we are not producing enough ammunition for the wars that's happening two places or maybe three places right now at the same time. So I think it's in macro. I think now is really important time to follow macro. I mean, usually VCs don't follow macro, and I agree with that. We don't care about macro because we're in the long run. You cannot predict what's going on in the macro, but macro affects so many aspects of what we do now, and it's one of the few times that we should keep track of all these macro events so that we know what's going on, where we're investing into.
I mean, I think now the expectation is for VCs for sure to be opining on macro events. I think even since like COVID, right? Remember like when COVID happened and everyone suddenly became like an epidemiologist or something or whatever the right term is. Chamath and stuff, and everyone started chiming in on that. And then now, like when I see like Mark Andreessen on stage and things like that, like a lot of these questions are not really about venture. It's about like shaping America's economy and our competitiveness and all that stuff. And I think that's a pretty crazy thing that we're all miniature philosopher kings, like in our respective funds now. And look at us talking about these topics here. So maybe we can shift back to talking about companies. And Ian, you're the one that's been sharing so many memes about this company on our three commas text thread right now. You want to introduce what's been going on with Toma Bravo?
Yeah, it's just not a big deal. One of the largest loss at a PE deal. I think their entire investment
Not a
Entire
big deal.
investment, not a big deal. It was a 7 point billion dollar loss, and they invested in one company called Medallion. I think it's Medallion,
Medallia.
and they Medallia, and the company's so under. I think they did LBO, buyout, leverage buyout, and the interest rate is high. They're paying too much interest, and they gave up, and they're handing over their company to their creditors. So it's essentially $5.7 billion wipeout for Toma Bravo, which is one of the best or largest software private equity fund in the US. And what I really love about this story is I were at Toma Bravo AGM multiple times. I met those guys, and what they're telling me was, as an LP, my problem with them was they're buying companies at a really high valuation, which was above the market multiple back then. And their argument was, hey, we buy high, but we sell higher. And I was like, that doesn't make sense. Who's
It's
going
like
to
a
buy it
Tiger
higher?
Global argument.
Exactly. And they're crumbling. Like they're losing a lot of money on different fronts, and all the LPs are freaking out. Everybody thought private equity was a safe investment, and I think this is going to affect the private credit that because they did the leveraged buyout, they had to loan the money from the private credit companies, so they're losing private equity money on the equity side. They're going to be start losing on the credit side, which is going to affect the private credit market too. So this is confusing to LPs because they thought, hey, PEs never lose money. They might do 1x, but they never lose money. And for private credit, LPs always thought, hey, this is guaranteed to return at least 10% for the last 2 or 3 years, and not 3 years, I guess, 3 to 5 years. And so all the CIOs of the world were like, why do I need to do venture? You can get 12% out of private credit with guaranteed through a Toma Bravo take private deals. And that is over, and that was never going to happen anyway. There was a dream that all the CIOs had, but so I think this is a sign, first of many, that we're going to be seeing a lot of private equity company and funds bought software companies at a really high valuation and cannot pay the interest and give back to the creditors. And even private credit companies are marking it down to 70 cents per dollar, so on a dollar. So I think it's going to be a big loss for the entire ecosystem. I don't know how this is going to affect the venture. There are two sides. One is, hey, we should do venture. Private credit is not guaranteed. There's a risk anyway. And the other side, hey, we lost money. Let's not invest into private assets anymore. So I think it's going to be a little bit of ladder, but we'll see what happens.
I mean, we're kind of also dancing around a different side of this story about Medallia, right? So this is a big SaaS company, and
Yeah.
kind of a poster child now of like this SaaS apocalypse, right? Ostensibly, like one of the reasons why this company is failing is because they are not AI native and their business model doesn't make as much sense in this era of AI. I mean, Kevin, is this just like the classic turn of just these old tech giants kind of falling when like a new disruptive, I guess, challenger comes in? It seems like it's a rhythm
Yeah.
that we've felt before.
It's interesting because I think on a statement, like Blackstone had said that they're inheriting this asset from Toma Bravo, but they said that the company Medallia was underperforming not because of anything related to AI, but what they believe are execution driven issues. And I think that's an interesting, I mean, obviously they probably have a vested interest in like rescuing the reputation of the future prospects of this company because they got to figure it out and turn it around. But I think it's undeniable that this definitely has something to do with AI coming and eating their some of their lunch, right? Because Medallia was basically providing a customer experience software platform that was able to capture like signals from different channels across like social media, text, video, traditional surveys. And so, they were doing something that is very, very easy now to do with a lot of AI tools, and a lot of startups are being able to synthesize a vast amount of data that's available and provide insights to like these enterprise customers at a far lower cost, right?
Yeah, it's a Claude project
Um,
now.
what was that?
It's like a Claude project now. Just dump the data
Yeah,
in there, right?
yeah. Ian could do it, you know.
I
He's
could
doing
overnight.
it
do
right
it.
now. He's building
Yeah.
his
Yeah.
disruptive chat.
He's making the next Medallia right now. So I think it's crazy, but you know, it is really crazy because Toma Bravo is definitely regarded as, you know, I would say one of the top three to top five, like in terms of performance. They've always done really well. Their brand is very strong. And so the fact that they got caught up in this is kind of, you know, shocking actually, to be honest. But you know, there's the AI component of it. Interest rates just like, you know, spiked up as well. So they're stuck with that. They probably over leveraged the business. You know, everyone was putting on a bunch of debt. SaaS multiples have gone down, so you can't even, you know, you underwrote the deal at maybe, you know, a multiple that is twice what the multiple is in the public markets now. So there's just a whole perfect storm of many different issues that I guess they got hit with. And I think we're going to see more than just this one, you know, show up from a lot of these private equity firms over the next few months. There will probably be another couple stories that come out. But this one is certainly getting a lot of eyeballs because $5 billion of equity value destroyed is pretty significant in the scheme of like their fund size. I think their Toma Bravo's latest fund for
I think
buyout, I think was
this one
24.
was a $12 billion or $14 billion.
Really?
So
Okay.
this was, I think they're 114. I searched, I Googled it. I think I have,
Yeah.
I
So it's
actually
earlier.
posted
Yeah. So
on
it's not even
Instagram.
one of the
Yeah.
big, their biggest fund, I think most recently was like 24 billion. But if it
Yeah.
was on a smaller fund, like that's a huge amount of lost value for that fund. So like their returns are going to look pretty, I don't know. I haven't seen the numbers, but it could look quite disastrous.
And who are their
Yeah.
LPs? Are they sovereign wealth? Is it like major institutions like Stanford Endowment, all that kind of stuff usually?
Well, we expect those are like GICs,
Yeah.
the traditional Toma Bravo LPs. I think
Well, yeah,
KIC
Toma
might
Bravo
be in it. I don't know.
is so institutional. Like they probably have I'd imagine they probably have almost every institutional LP out there, right?
Yeah.
Yeah,
Yeah.
I think this is their fund 14, and the fund size was about $18 billion. So they lost $5 billion out of $18 billion in one deal,
Yeah,
which I think is crazy.
yeah. Though I wonder if the 5 billion was what they had marked it at, because I think they bought the company for six
Yeah,
billion in 2021, and then they put 3 billion of debt. So I think their entry was probably three, but for some reason, and the last mark might have been five on the equity or something before this happened.
yeah,
But still, it's
yeah.
a massive amount, right? It's like you know, if it's either somewhere between 20 to probably like 30 some percent of the fund value.
I think this is the largest equity wipeout since 2008
Hmm. Wow.
in the private equity history. So,
Yeah, and the
and
sad thing too here, man, it's just like there's a bag holder at the end of it. I mean, I was just trying to do a quick Google search on the LPs for Toma Bravo, and a
everybody.
Massachusetts pension fund is like one of the biggest contributors there. So, you're kind of hosed if you're part of that. Well, not hosed, but it's gonna hurt. It will be felt, right? If like pensioners now are gonna be the ones like taking this one.
I mean, the problem
Um,
is this is not just Toma Bravo. Like a lot of people were following Toma Bravo playbook. Vista, like Silver
100%.
Lake, KKR, Blackstone, Francisco Partners. Everybody was following this playbook. So it's gonna be same for a lot of companies that they have invested. A lot of them must be underwater right now. So
Well,
we're gonna
okay,
see
actually,
more of this.
I do have a question because, and this is more of like a hedge fund question, but I'm wondering whether this ever applies to PE. Is there ever a model where a PE fund actually allows redemptions?
No,
That never happens,
not
right?
really. No.
Okay.
No.
Yeah, because I'm wondering like, okay, if I'm the Massachusetts pension and I'm spreading out across like Toma Bravo, like Vista, these other ones, and I'm seeing like sensing that there was a poor stewardship of capital, I probably would be messaging all my managers saying like, show me your marks right now. Like, tell me like when the liquidity is going to be happening. And, the worry here is like a private equity contagion theory, right? So back in the Great Recession, there's like Bear Stearns was kind of like one of the beginning like the things that kind of tilted the whole thing. people stopped believing like they actually had like sufficient liquidity on balance sheet to like cover like all these like CDOs that were like collapsing in value and things like that. And actually, like looking back at the autopsy of that, I think actually Bear Stearns could have weathered it, but it was just like people's fear drove down the value of the entire thing, right? And then brought down the industry. I don't know if we're at that point where this feels like contagion, but kind of curious to my brothers here as to whether you have a reaction to that.
I mean, I don't think there's as much of a contagion, like immediate contagion effect, because as we said, like these are closed-end funds, right? So it's not like they can take their money away, but the LPs could decide not to fund their upcoming
Right.
capital calls, right? So say Toma Bravo calls, 10% of your commitment next month, you might just say, you know what? No, thank you. Like we're just going to stop funding it. And there are obviously penalties associated with that. That,
Lawsuits. Yeah.
yeah, well, lawsuits, and also like usually LPAs, depends how it's structured, but they could just take the
Yeah.
existing interest that you have in the fund,
Yeah.
like whatever you funded already,
Yeah.
they
A
can take
quad
that and
themselves. Yeah.
yeah, and basically redistribute that value to the other LPs. So there's things that they can do which would obviously be painful to someone who decides not to fund their capital calls. But that's probably like the worst case scenario in my mind of or they just get lawsuits, right? Like maybe the LPs be like, we'll go and say, hey, you had I don't know what the exact term is, but gross
Yeah.
negligence, you guys like really messed up here or
Actually,
something.
I want to rattle on this a little bit here, Kevin. I got a question for you. So, like, what's stopping me from colluding? Like, I could just message all my LPs and say, let's just none of us do our capital calls, right? This is a shit show, right? I mean, like, the I guess like these aren't like 100 LPs in a fund, right? It's usually like 10, right? And they're all
Yeah.
meeting at the LPAs or the AGMs and all that stuff.
Well,
I don't
it's a
know.
little bit of a, I don't know. It's an interesting idea. You could start like a cartel of like LPs and just like,
Yeah, it's like none
like
of us fund the
strike.
capital call. Yeah, kind of
Yeah,
thing.
like
Yeah.
strike. I think it's tough though because there's a little bit of a prisoner's dilemma where like if not everyone does it, like then I think some of the LPs stand to benefit if they do continue funding it, where part of the people's value of their stake that don't fund it gets like redistributed to the others. I think it's also just like a bit of a reputational issue, right? Like if all these guys like stop funding, I mean, Toma Bravo might just go around and sue them and be like, yo guys, like you signed a binding commitment to this, you we're gonna sue you guys because you're going back on, a commitment that you made as well.
Yeah, but my response to that would be if I'm Massachusetts Pension, be like, look, we realize that what we wrote, what was on paper, but at the end of the day, we have to protect our pensioners, and we think
Hmm.
that you're
Yeah.
acting in bad faith. Like there's like a public jury that
Mm.
they would crush Toma Bravo with, right?
And the thing is, I don't think that's ever going to happen. Somebody has to process that internally at a pension fund to do this, and nobody's going to do it. Literally, this is going to be a pain in the ass to go through internally to persuade people, hey, we're going to make these changes. These pensions hate changes. These institutional LPs really hate these dramatic actions.
My open
They
claw will
already
do
have
it.
we can do it, but I think they're gonna be like, hey, this is already allocated, this is already budgeted. We're just gonna give it away. We're not gonna do another paperwork because we don't get anything out of this. If they save money, do they get incentives? No. If they lose money, do they get punished? No. That's the life of LP. Like you don't have to make a big deal out of it. You just go with the flow. It's budgeted. They're not gonna kill me because it's Toma Bravo. Nobody gets fired investing in Toma Bravo or Blackstone. Even if they're shitty, everybody did the same thing. So I just need to keep my job and go on and wait a little for the next round. So
Mm.
I
It's
Yeah,
think this
crazy,
is
but I
this.
think Ian's right. There's just like no
Yeah.
incentive for these like
yeah. Professional
institutional
managers.
pensions
Yeah.
to rock the boat. Like why go on a limb and risk your job and to do all this work and say, you're not even gonna get. It's not like you're gonna get credit or money for saving. Saving the money of the pensioners, which sounds terrible, but I think we all, I mean, Ian knows probably better than we do, like how these places are set up. Like the incentives are just not aligned in that way.
It's not there. Yeah. So
Yeah. Well, let's rock the boat on a different topic right now. Let's end it with our last topic, which is OpenAI, and also the near madness like shitty week that they're having. So a couple of roundups on this one, right? One is Microsoft and OpenAI had an exclusivity contract or understanding where OpenAI was going to be powering a lot of Microsoft products, but Microsoft is now unwinding that. And you might have already seen that as an end user with some of the Anthropic integrations that you can do that actually, frankly, work really well too. So kind of neat. Microsoft might be turning into some sort of weird Switzerland where they can like apply any model there. I don't know what's going on with their Copilot or Cortana or whatever it's called at this point. That's a different topic. And then this is one that kind of was really confusing to me. So I heard this story that Ian's bot picked up too, which is that OpenAI misses Q1 revenue targets. Okay, this is a private company, right? And rumors that they're missing their revenue targets are starting to affect the rest of the ecosystem. You know, like putting a little bit of shakers and tremors of like, are they going to be able to raise at higher valuations? Is it going to affect Anthropic? Is this like the start of the AI implosion? A private company missing Q1 revenue targets, right? I don't know how to wrap my mind around this new norm, actually. So let's go back to you, Ian. If you have reactions to either the Microsoft thing and or the missing revenue target story from this week.
I mean, we talked about Sam Altman stuff extensively. I wrote a newsletter that, had like 30 different things Sam Altman fucked up last week to my Korean audience. And I think
just 30.
One thing I think was crazy about all these stories and this OpenAI missing the target and all these, takes on Sam Altman is, I think he's going through a lawsuit with Elon Musk.
Right.
I think that's amplifying all this crazy stuff. Because I think this is a very crazy conspiracy theory that I have is Elon Musk is funding all these stories right now. He's trying to scratch, the Sam Altman, his character, and OpenAI and everything, so he can win the lawsuit. Because he's not a winning position in this lawsuit. He has some argument, but I think the rule of law might, more on the law is more on the OpenAI side, on Sam Altman side. So there's a lot of media play going on here. Microsoft stuff, maybe it's been going on for a while, but everything's just the media's attacking OpenAI too much. Again, I'm not a big fan of OpenAI. I'm an Anthropic guy, even if I invest in OpenAI. But this is too much, I think. It's the Elon Musk leaking all this shit.
Actually, Ian, if you don't mind, before we get into Kevin's reaction, do you mind just summarizing what this lawsuit is all about for our audience that isn't following?
So the lawsuit is Elon Musk against OpenAI, and Elon was one of the first donors to OpenAI Foundation, which is nonprofit. And then Elon got kicked out, or he actually left. We don't know. We're still fighting over that, I think. And left OpenAI, and OpenAI is doing really well. And Elon got pissed, and he's suing that they took Elon's property away. One, and the other thing is the OpenAI became for-profit to a certain degree. So Elon Musk is claiming that, hey, they changed nonprofit to for-profit. This is a really bad practice that they're setting up. And he's saying, hey, we shouldn't let this happen. Otherwise, all the startups are going to do the same thing going forward. So he's suing for his own money. I think he donated $1 billion or something, a big portion of $1 billion. And then the other side is the non-profit to for-profit transition is illegal type of lawsuit. It's happened. It started on Monday this week or last week, and it's happening in Oakland, I think, California.
Yeah, that's right. Yeah. Kevin, have you been following this story? Anything that you're picking up in your observations?
I have seen a few like interviews post the trial and stuff. It's kind of funny because like I don't know, Sam is doing these like on the spot interviews, and as we know, he's not very good at live ad hoc interviews.
We all know that.
Yeah. It's pretty crazy. I don't know if there's any precedent for all of this. So I just have no idea how someone's going to be able to, like, how they're going to judge this case. But I mean, I don't know. I would be pissed if I was Elon too, where like, I think in the article, it talked a little bit about the fallout and how, Elon basically separated himself from this at a certain point and then the company just like took off, right? So um, I don't, to be honest, I don't really have a huge opinion about kind of the case. I think I was gonna comment on what you said, Eric, about like the revenue miss, and it's a private company, but this is something that I learned actually when I was covering the public markets and actually doing like debt investing. Even private companies often will report their like financial quarterly figures. And if they're big enough, sometimes because they have debt holders, sometimes they have other kind of reporting obligations. So it's not entirely uncommon for like very large private companies to actually report their financials. But what's crazy is that after they reported that they missed their goal from their original projections, the like stock market sold off a ton,
Yeah.
right? Like CoreWeave went down 5%, Oracle was down 6%, Nvidia was also down. So I think it was just kind of a little bit of an unraveling that like, hey, the expectation, we're not meeting these lofty expectations that, they've obviously been talking to investors and internally targeting, which I don't know, may be the first sign of weakness in this kind of circular economy that we've been talking about, where everyone's selling, products to each other and it's going in a circle between the model players and the hardware players. Um, but yeah, it's I think we're going to see a lot more volatility in the market as these companies, whether or not they go public, actually. I think, if they have to start, the other thing is it's hard to keep leaks from coming out with these large companies, even if they're private, because just so many people are going to be getting financial results and reporting from them. Like there's so many private investors that are going to be asking and getting the financials for these companies, right? And as tight of ship as you can try to run, like, people will take photos to talk about it with their friends. Like, people are going to find out that, this is the results and this is what they were what they were projecting before, right? So it'll leak out there
Yeah.
regardless. So it's kind of interesting, but I think this kind of private, like quarterly earnings kind of reports I think are going to start to move the public markets significantly.
I think, these days, I think you don't want to be a public company CEO. And I think Stripe is doing really well as a private company and their strategy works out. I kind of feel like I wish SpaceX stayed private forever too. SpaceX stayed forever too. Like you don't need a massive IPO event, but you can still grow the company and sell your stocks. Whoever, like LPs or employees who want to sell the stock, do it through the private market. And SpaceX was actually doing that. They're doing employee tender every year, and Stripe is doing that every year. So if you need liquidity, you have a window to do it. Then you don't have to go through this all crazy stuff, or you don't have to deal with these retail investors or public investors too. So I don't know. Sometimes that might actually be a good strategy for a lot of private companies, and I think it's becoming a trend to some extent in current market as well.
Yeah, I totally agree. I think being a public company sucks. Like quarterly earnings is terrible. Investor like relations with like public markets investors is really difficult, especially because like a lot of the money, like capital, is from hedge funds that what we used to call like fast money. So they're always like going in and out of different names really quickly, which increases the volatility of your stock price significantly. So I don't blame any like of these large growth stage businesses like Stripe and others. Like if I were them, I would just stay private forever.
I think it's a good strategy. Yeah.
All right, guys. I think we should probably wrap here. It's been a very full hour where we covered things like macroeconomics, oil and gas, China, geopolitics, and always AI with each of these episodes as of late. I think it's my turn to sign things off. Is that right?
Yeah. Go ahead. Yeah.
Okay. Okay. Well, listeners, primarily our Korean listeners, because that's apparently where all the audience is right now. It'll change over time. I promise we're going to expand. Really appreciate that everyone spent some time listening to the three commas. That's us, And, we want to remind folks using our previous podcast name that nothing that we talked about was investment advice or should be construed as such, right? The puts, the shorts, the longs, like, don't necessarily copy us. What do we know? We're not that smart, right? But we always have strong opinions like a good VC, right? So, my brother, is always fun to wrap up the week with you guys. Ian, have fun in Korea for your remaining time. Kevin, hope to see you in the Bay soon.
All righty. Thank you, brothers.
All right. Thank you, brothers. Talk to you soon.
Yeah. Bye.